In this video, we will be studying about some miscellaneous incomes that you get in your question paper. So number one, we will be studying about your national disposable income. So your national disposable income refers to the net income at market price available to the country for disposal, which means it is the sum total of national income, that is NNP at FC, net indirect taxes and net current transfers from the rest of the world. See, in NNP at FC, we deduct the net indirect taxes, and while calculating the national income, we do not consider the transfer payments. But national disposable income includes your NNP and FC plus your net indirect taxes plus your net current transfers from the rest of the world. Right? Where your net indirect taxes means indirect tax minus subsidies, and your net current transfers means current transfers from rest of the world minus current transfer paid to the rest of the world. So, how much you've got from rest of the world, the current transfer, that is gifts, grants, and one-sided unilateral payments, and what you have paid to the rest of the world, that is your net current transfer and net indirect taxes. Now with this only we have the concept of gross national disposable income. So this you get is your gross national disposable income. From this, if you deduct your current replacement cost, or you can say your depreciation or the cost or the consumption of fixed capital, you get net national disposable income. So this is the concept of your national disposable income. This is second income will be starting is factor income from net domestic product acquiring to private sector. Now what they've asked NDP, that is net domestic product at AFC from private sector only. See, your NDP at FC includes, there are two sectors, your private sector and public sector in the economy. So they've asked the contribution of only private sector. So in order to calculate NDP at FC from private sector, what you do, from normal NDP at FC, you subtract income from property and entrepreneurship acquiring to the government, departmental enterprises, means any income that you get from the government, subtract saving of non-departmental enterprises. So these are the two income that you subtract from NDP at FC. So you get only the NDP at FC from private sector. Private income. Now what is private income? Private income is the income of the private sector obtained by any source, productive or otherwise. Means productive means your factor incomes, or otherwise means your transfer payments, and the retained income of the corporations. So for private income, what you have to calculate, you have to first calculate your net domestic product at factor cost. From that, first you will subtract your income from property and entrepreneurship accruing to the government departmental enterprises. Second, you will deduct your saving of non-departmental enterprises. So what will you get? You will get your net domestic product at factor cost from private sector. Now from this you have to add the transfer payments, that is your net factor income from abroad, plus your interest on national debts. Third, your current transfer from government plus your current transfer from rest of the world. That you will get your private income. First, convert your NDP at FC to your private sector income, then add these four to make it a private income. Now, personal income. Personal income means income of the households. So, personal income is the total of all the current income received by the household from all the sources. So, in order to calculate your personal income, first you will calculate your private income. From that private income, your private income includes the income from private sector as well as private households, right? From that, you will subtract your undistributed profit or you can say corporate savings, that is income of the corporates. And subtract corporation tax, because these two are not included in by your household, so these are not received by the households. So if you subtract this, you will get the personal income. And the last income which we will be studying is your personal disposable income. Now, your personal disposable income is the income remaining with individual and households. See, your personal income was your income of the individuals and households. Now, what is personal disposable income? The income of individual and households after deduction of all taxes levied against their income, that is the taxes they pay to the government and their property by the government. So, your personal disposable income is calculated. Your personal income minus your taxes minus your direct personal taxes that you pay on your income to the government minus your miscellaneous receipts of the government administrative department or miscellaneous fees and fines paid by the households. See, whatever you pay to the government in the form of taxes or in the form of fees and fines that are deducted from your personal income, so you get the personal disposable income. I hope you have completely understood this. Do download our Scholars Learning app and enjoy the learning experience with us.